Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author and TradingView with over 190k reputation points. In this video, I will be speaking about Euro USD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing and how they're shifting their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. If you're new to the channel, make sure to subscribe. This is the place to be for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. Starting here from the monthly time frame, what we can see is that at the moment we have a market which is testing a quite strong historical support and demand area. From here, in fact, all these previous rejections to the upside have been created. These are all very massive impulses to the upside. And what we can notice here is that the market has just created yet another test of this zone, has already started rejecting it to the upside right now. And in a situation like this, we could expect more potential bullish price action to be created away from this zone, as already happened in the past, every time that the market tested this exact same level. So from a monthly standpoint, if we look at the bigger picture, everything seems quite bullish. Now, if we zoom in into the most recent price action, what we can notice is that from a pattern standpoint, we just had the start of the creation of this inverted head and shoulders with the left shoulder here, the head here, and the right shoulder here. We can also notice that since we have an impulse and correction, if we want to measure the correction after an impulse, we have to take our Fibonacci from the low to the high of the impulse leg. And this shows us how we have the 0.618 and 0.786 Fibonacci retracements lining up exactly in this zone, therefore creating confluence of support because we have the Fibonacci levels, the inverted head and shoulders, which has the left shoulder exactly at this level. And all these layers of support increase the probabilities of seeing institutional longing inside of this area, which at that point could further increase the probabilities of a potential rejection to the upside away from this zone. And we will be speaking more in detail about institutional longing in just a few minutes when we move to the commitment of traders analysis. For now, let's keep all of this in mind and drop down on the weekly time frame. Now, from a weekly perspective, the situation is quite clear. What we had here was a layer of resistance, which started being resistance here, from which this massive rejection to the downside was created, then was tested again here as resistance and respected as resistance, but now the market broke it to the upside. So all that previous resistance was turned support here. The market retested it as support and is currently in the process of rejecting this level to the upside. So the weekly time frame, it does seem quite bullish, at least at the moment, and it seems definitely possible to see more bullish price action and the continuation of this trend to the upside. So essentially, the continuation of the creation of weekly higher highs and higher lows. So let's keep also this in mind and drop down on the daily time frame. Now, from a daily perspective, I also spoke about Euro USD just a few days ago when the market was around this area. I explained all the reasons for which we could expect this rejection to the upside. And in fact, that is exactly what the market just gave us. And by the way, I will link in the description that previous analysis so you can go and check it out for more free education. But at the moment, what do we have? What kind of new structure this market has created? Well, from a daily standpoint, at the moment, it is clear how we just had a massive impulse to the upside. After an impulse, the market usually follows with a correction. And if we want to measure that correction, we have to take our Fibonacci from the low to the high of the impulse leg. And at this moment, this shows us how we have a 0.32 50% and 0.618 Fibonacci retracement levels, which are lining up exactly at this zone, therefore creating confluence of support at this area. And when there is a confluence of support zone, that increases the probability of seeing more institutional longing. Speaking about institutional longing, let's go and see what we have when it comes to the commitment of traders. So what the big players and hedge funds are doing in the market. Well, if we check the data for the euro, we have to already keep in mind that we are checking Euro USD already, because all currencies on the spot are traded against the USD. So if we're looking at the data for the euro, we're actually already looking at Euro USD. And what we can notice is that with the last reports, we just had a massive increase of net positions that went from minus 9.5k net positions all the way up to 17.7k net positions. So we just had a massive increase of the net positioning, meaning that institutions have been moving back to the bullish side for Euro USD, therefore making it stronger. And in a situation like this, we can also notice how we currently have a positive net positioning, so more longs than shorts, with 183k longs compared to only 165k shorts from an institutional perspective. So let's keep all of this in mind and move back to the chart. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find both on the screen and also linked in the description, so you never miss new updates. Now, back to the analysis. Well, in a situation like this, if we will see a correction to this area, what would I expect? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily time frames combined with the COT data, those are the best time frames when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best time frames for that are the intraday time frames, so 4 hour and lower. Therefore, if the market here would correct to this area and shift from an intraday bearish to a bullish market, I wouldn't be surprised at that point to see a potential rejection to the upside, completing this daily impulse correction and impulse pattern to the upside. That definitely wouldn't surprise me. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website. Here, you have the possibility to gain access to my entire all-inclusive mentorship program. This is the most complete all-inclusive mentorship program. You will see here a complete presentation of everything included, which is essentially all my courses, including the programming course on automated algorithmic trading. You also have the possibility to gain access to one-on-one private mentoring, all included in the mentorship program, the trading station software with the Telegram signals notification, and also the COT data software, which is essentially the one that we just used in this analysis. So everything all for lifetime access. And if you continue to scroll down, you will see that you will have the possibility after the testimonials to join and gain automatically access with the email and password that you will create during the sign up process. So I really suggest at least to go and check it out at transparentfxtrading.com. You find the link also in the description, and I will see you in it. If you enjoyed the video, make sure to drop a like. Also, let me know in the comments below any pairs or topics that you would like me to cover in the next videos, and I will see you in my next breakdown.